Hey everyone, welcome back to Corporate Decoder, the place where we take a deep dive into company secrets and spill all the tea, if you will. Today we're looking at Senseonics Holdings Incorporated, and let's just say they are making some pretty drastic moves to try and get things back on track. This is a Form 8K filing which companies use to announce major events that shareholders should know about. And folks, Senseonics is definitely announcing something major here. What is the big news? Well, on the 16th of October 2025, Senseonics Holdings Incorporated filed an amendment to their corporate papers. This is just a little tweak. This is a significant change to the very foundation of how their stock works. They're reenacting a 1 for 20 reverse stock split. What does that mean in plain English? Imagine you have 20 apples, and suddenly those 20 apples magically become just one super apple. That's essentially what they're doing with their stock. For every 20 shares a shareholder owns, it will be consolidated into a single share. This is often a move companies make when their stock price has fallen very low. They do this to boost the share price per share, making it look more substantial and potentially attracting institutional investors who might avoid penny stocks. Along with this stock consolidation, they are also drastically cutting the number of shares they are allowed to have in total. They're going from a massive 1.4 billion authorized shares down to a much smaller 70 million. Think of it like a company having way too many tickets printed for an event and then destroying most of them to make the remaining ones seem more exclusive. This reduces the overall supply of shares available in the market. This reverse split will happen automatically for everyone holding the stock. So if you owned, say, 200 shares before this, you'll end up with just 10 shares after it takes effect. Now, this also impacts things like stock options and other equity awards. The price you pay to exercise your option will go up proportionally, and the number of shares you get will go down. For example, if your option was to buy 100 shares at $1 each, after the split, it might become an option to buy 5 shares at $20 each. The overall value is intended to stay the same, but the numbers change. The same applies to restricted stock units and warrants too. What happens if you end up with a fraction of a share because you can't really have half a super apple, right? Well, Senseonics isn't going to give you a sliver of a share. Instead, they'll pay you cash for those fractional shares. This is common practice to simplify the accounting and ensure everyone holds whole shares. Mark your calendars, folks. This whole transformation is set to officially kick off for trading on the Nice American starting the 20th of October, so very soon. It will still trade under the same ticker symbol, SENS, but all the prices and share counts will reflect this new split adjusted reality. And for the real number crunchers out there, even the company's identification number for its stock, the CUSIP number, is being updated to reflect these changes. It is like getting a whole new ID card for your investment. So what's the story here? Senseonics is a medical technology company, primarily known for its continuous glucose monitoring devices for people with diabetes. They've been facing some significant financial headwinds, and this reverse stock split is a clear signal that they are trying to make their stock appear more attractive and stable. It's a move to prevent delisting from major exchanges if the stock price stays too low for too long. Looking at this from a broader perspective, this move itself doesn't magically make the company more profitable or its products more successful. It is more of a cosmetic and structural change. The real test for Senseonics will be whether they can improve their financial performance and grow their revenue. Without that underlying business improvement, a reverse stock split can sometimes just be delaying the inevitable. The key risk here is that the market might not respond positively. If the underlying business issues aren't addressed, the stock price could continue to decline even after the split, leading to further dilution and potentially more drastic measures down the line. The opportunity, however, is that if they can leverage this cleaner share structure and execute on their business strategy, they might be able to rebuild investor confidence. In conclusion, Senseonics is making a bold move to reshape its stock. It's a sign of distress, but also a clear attempt to right the ship. Investors will be watching closely to see if this structural change is accompanied by tangible improvements in the company's actual business operations and financial health. Alright, that is our breakdown of Senseonics Holdings Incorporated's latest filing. What is your take on these drastic stock moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. Don't forget to check out the Discord link in the description below for more exclusive content and discussions. Thanks for watching. See you next time.